Howdy, hot shots. It's the Dividend Daddy, your favorite, not a financial advisor with not financial advice. Are we in for an October surprise? Monday morning when the market opens up, which way is it headed? I bet the over that it's going to go down into negative territory, and it could do so fast. We saw the crypto market has just tanked. I mean, I've lost over 15% in the last week in my crypto portfolio. And we saw XRP flash crash to 77 cents on some brokerages. Now, it was so fast that people couldn't even get their orders filled. I didn't have a standing order, and I'm really kicking myself for that. I don't know what it got down to exactly with the broker that I use. I saw one person say their broker got down to $1.10. On Binance, it got down to 77 cents. I would have loved to have picked up more at those prices, and it went immediately back up. So obviously, somebody either liquidated a gigantic position or they shorted the market down to purchase it and ride it back up, which we see a lot of that market manipulation, whether it's technically illegal or not, probably depends on the circumstances. But we see... And listen, I like a lot of what Trump says, but we see what could potentially be a lot of market manipulation out of him too. We see it I have seen it before with Elon Musk, in my opinion. You'll see him tweet something and then tweet the opposite or just let it fade away. And I feel like he makes a lot of money when he does that. Trump was doing that as well. He was kind of hinting at tariffs, and there were these big trades in the crypto market. Big shorts in the crypto market, and then all of a sudden he comes out 100% tariffs and launches it. And I've seen reports, and I don't know how true they are, that the Trump family has doubled their net worth since he won the election. Now listen, I don't really like politicians at all, and a lot of these people that are billionaires did not get that way with the most moral behavior. So I'm not here to attack him, and I'm not here to defend him, but what I'm saying is, I feel like there's a lot of people out there, including companies, that are manipulating the market. One of the huge examples of that is, if you haven't seen the video, I'll try to post a link to it in the description if I can find it. Somebody was talking about all the income that's being rehypothecated amongst the AI companies. So for instance, OpenAI gets an investment from NVIDIA for $100 million, but then OpenAI turns around and buys NVIDIA chips for $100 million. And then Grok gets an investment from AMD, and then they turn around and they use that money to purchase chips from AMD. And so the money's just going around in circles, and it's getting rehypothecated and turned around and making it look like there's hundreds of millions to billions of dollars worth of investment and income for these companies whose total sales really only total about $15 billion, and that's a loss. It's not even profit. And so people are out there saying things to manipulate the market. People are out there behind the scenes, moving money around, making it look like there's more money than there is, creating a super bubble in this AI stuff. And AI is here to stay. Like, AI is not going away. It is absolutely going to affect the jobs. It's absolutely going to affect the way that business is done and the way that companies are run. But that doesn't necessarily mean that it's super profitable right now, or that with the amount of money that they're putting into it, it's ever going to be super profitable. So it probably isn't a bubble. Now, does that mean it's not going to keep going up? No, it doesn't, because bubbles can get bigger. Or the income can rise to the point where the bubble just kind of always is a bubble. But I would expect that any kind of a hiccup could really drive that stuff down. We saw some of it on Friday, and I'm sure we're going to see more of it in the future. But how fast is it going to happen? Well, what we've seen the last couple of crashes is that they've figured out the algorithms, and the companies using the algorithms and the big investors that use the algorithms have figured out that they can drive prices down. They can blow out people's stop losses. They can get people to panic sell, and then they can buy it right back. So we've seen, and the first time we saw it was during COVID. We saw that V-shaped recovery, which did not make any sense, and anybody that took advantage of it did so on a whim or a guess, because it was not a historical. It wasn't a historically common event, right? We didn't have that before. What we would have is we would have a big push down, and then we would have a dead cat bounce, and then it would trend lower, and it would be in in the doldrums for a long time before it started moving back up. These V-shaped recoveries mean that people that have a lot of cash or a lot of access to capital are able to capitalize on those while leaving the mainstream like you and me out. And that's why I say have some dry powder on the sideline so that you can take advantage of those. Because if there's a big crash in anything that you're investing in and you can buy it at the bottom and then it immediately goes back up, well, you've lowered your cost basis significantly. But if you have to get access to those funds by moving money around or by waiting for a CD to mature or selling some other investment that could also be down at the same time, you're going to miss out on those pricing opportunities. So I would be careful going forward. I would not deploy all of my capital. Obviously, I can't tell you what to do. You got to make your own decisions. If you're going to make the bet, you got to do the vet. But I would say just have some on the sidelines. That way, if something that you're in that you actually believe in, okay, that you think is going to be good for you long term, goes down by 40% overnight, you can jump in and capitalize on that before it bounces back by 20% and stays there. And you could get a lot lower cost basis that way. And you have to figure, if you have something that's at 100% and you've got money in there and it drops down to 50% and you can snag some more and it bounces immediately back to 75 or 80% of its original price, you have made 50% on that investment that you made at the bottom, which is going to give you a cost average that is much lower than your original investment, and it's going to keep you treading water. So I think that you should have some capital ready to deploy and that you should be ready to snag those good deals. And you should probably have standing orders if you have money sitting in your account. I should have been doing that with XRP. I did have some money sitting in my account, and I was going to buy XRP if it went down, but it went down and up too fast, and it went down way further than I thought that it would. I didn't think we'd ever see that kind of a price again. And of course, I didn't see it because I didn't see it till after the fact. So I should have had a limit order in for whatever price I was hoping to get it for, just in case. And I've been taught that lesson before, and I didn't learn it. I need to learn that lesson. I need to always have standing orders just in case a flash crash like that happens. I get to take advantage of it. Now, obviously, you can wind up catching a falling knife like that, but if you believe in the product long term, then that's not as big of a deal for you as if you're just trying to trade something that you don't really believe in, but you're trading on momentum or you're trading on public sentiment. If you're trading on your own beliefs and your own values and your own commitments, then you're not going to mind if you have to be underwater in something for a while. I like to think of for instance, Alti. I am still waiting to see if Alti is a good play long term. I'm kind of treading water with it, but I'm not really making any money, and I'm missing opportunity on other stuff while I have it. I would not want to buy Alti as it crashes necessarily. I wouldn't want to just have standing orders in there buying it at 50% of its value because I don't know that it would recover, right? It's gone down a lot and it hasn't really I've never seen any kind of recovery out of it. So if it went down by 50%, I wouldn't expect it to go up by 50% overnight back to where it was. Other than the fact that it has those protective puts. And so if it went down, in aftermarket hours, because we've talked about before how it's an open-end fund, so shares are created and shares are liquidated. It's not going to go down 50% in 1 week, in my opinion, because it's got protective puts that are going to keep that from happening. If it happens in a closed market like Robinhood overnight or aftermarket hours on Schwab or something like that, where there's a limited number of those shares available and the market makers aren't there in order to create and destroy shares, you might be able to snag something like that. But I haven't seen those kind of wild moves on Schwab in an equity like that. But I have seen them on smaller brokerages for cryptos because there's a small pool of the coins or tokens that are being traded, and so it's a lot easier to manipulate. Coinbase is what I use, and I'll put a link for that down below, but I don't see as wild of a swings. I saw it dip significantly, but it did not make it anywhere near 77 cents from what I could tell. But on Binance it did, and Binance is a pretty big brokerage. So somebody obviously did something with a large amount of XRP on there. Now you have to ask yourself, if somebody was doing that with XRP, what is it they're trying to accomplish? They were obviously trying to accumulate more XRP, unless they just saw an opportunity. They said, hey, the float on XRP on this brokerage right here is really low right now. Like I could probably manipulate the price. But in my opinion, when people do something like that, it's almost a sign of good things to come because why did they make such a big move and make such a big investment? Were they trying to accumulate more? And if they were trying to accumulate more, why were they trying to accumulate more? And what do they know that I don't know? About timing or events that are coming up that could possibly drive the price up higher. And they're like, okay, we got to make our big move right now so we can accumulate more. That's not what happened with Alti when it flash crashed overnight in Robinhood. What happened with that, in my opinion, and from what I've read, is that they changed their margin requirement on it, which caused a bunch of margin calls, which made people get their sells triggered and triggered more stop losses, and it just kept pushing it down. And so that's a good reason why not to have stop losses set, especially in extended hours, and why not to use too much margin, because when that happens, then your positions get sold off, and they typically get sold off at a loss. So that's a good reason to be careful with margin. So you should always be careful with margin, especially on something in the aftermarket hours, and especially on something in a small pool of shares in aftermarket hours. I mean, a lot of the bigger brokerages seem to be kind of sharing the pool, and so it's not going to make such big moves. But Robinhood, with its 24-hour market, it's like all other Robinhood buyers and sellers, or maybe even Robinhood itself. I don't know. But we've got houses foreclosures up. We've got housing foreclosures up. We've got the car market in the doldrums. We've got that auto parts manufacturer or seller that went bankrupt, and they had the collateralized obligations on that debt, and so it caused a lot bigger debt. You've got Trump arguing with China and talking about these tariffs that could be a trigger. You've got Venezuela. You've got Iran. You've got Gaza. You got that big explosion in Tennessee. Any one of these things could be the precipitating event that leads to a flash crash, October surprise, and it could have already happened. It could have already happened. Like, this could be happening tomorrow. So you need to be watching it. With the crypto dip, that's going to cause problems. People are going to get scared. People that have a bunch of gains, or people that have just gotten into the market, they're going to get scared, and they're going to want to lock in their gains, or they're going to want to protect with the money that they have. And when they move out, flash crash, here we come. But I expect, because it seems like the new norm, that it will be a V-shaped recovery. So if you have something that you've been waiting on and you see it at a really good price, that might be the time to get in. I am going to be trying to buy some KQQQ. I'm going to add to my QQQI position. I may even start curtailing some of my Alti position, because it's just really never doing anything for me. Like I said, it's just kind of barely keeping my head above water with that one. So I might start trimming that position and moving it into something that looks like it might have a little bit more growth potential, a little bit more of a steady NAV, so that I can get that income and potentially use it at some point in time instead of just continuously reinvesting it. I don't need it right now, but I am going to want it at some point in time. And if it's never going to go up, and it's just going to keep having to reinvest in order to keep the NAV where it's at, then that's not really a good game plan going forward. But let me know what you guys are doing. Let me know what you think. Let me know if you think the market's going to go down tomorrow. If you think that the next dip, that big dip, is going to be a V-shaped recovery, the way that I think that it's going to be. Do you think this tariff talk that with Donald Trump threatening with the tariffs on China is going to cause another situation like it did in April, where we're going to be able to, that was partially tariffs, but it was also the bad news about AI, of course. I think sometimes they know a crash is coming, or they know something's going to happen, and they kind of do something to trigger it so that they can get it out of the way, and they know the timing of it. What do you think about this AI situation with all of the funds being rehypothecated? Put it all down in the comments so we can discuss it together and learn together. All right, I'll see you D-Gens later.